Yo, what is going on, everybody? Happy Monday, man. It's time. We are ready. I think Sharky may join us. We'll see what he's got going on. We'll see. But man, market started looking good out of the gate and then not so much all of a sudden. Anyways, I'm just chilling here with my Celsius. Hopefully she can bounce. We'll see. But yeah, welcome guys. If you're new, every Monday we kind of do this. Just take a look at the market, see what's going on. What do we need to watch out for this coming week? There's not a whole lot on the calendar, but there is a lot of stuff going on. I think there's man, out of the gate, if you're looking at the pre-market, it was looking okay. And then pretty quickly, what was that, about like 30 minutes in, we just kind of started to nosedive and it got real ugly out there and it's starting to base out. So hopefully you guys are taking a little bit of a break. Lunch hour is just hitting the wire right now. So we'll see. I have like one real new trade on that was looking rough for a bit, but I'm not really worried about it. Now it's looking a lot better. So I think with that said, again, we kind of approach trading like a business, right? I trade for a living. Ideally, the idea is to make money. So hopefully we can help you guys make a little bit of money. We'll take a look at what we got going on this week, some trade setups. If you have anything that you want to take a look at, good morning. Drop them in the chat and we can pull them up. So without further ado, let's get started. I think, last week there was a ton of stuff going on the market. And if you don't know, oh God, Sharky is like, he needs a link. What a goober. All right. He's in. He'll join in a second. Last week, if you're looking at the market, I think from a broader perspective, it was really the first week that we lost really like this annual trend line that SPY has been trading on. And, the Qs had lost it maybe a week or so prior. But the thing is that like it hasn't really like keeled over and we've been kind of like chopping around it for a while. Morning, Tony. So, that's kind of where we are. We lost a pretty key level. We lost the 20-day simple moving average on SPY. We just barely tagged the 50-day simple moving average. And I'm going to show you guys what all this means and what that looks like from a chart perspective. Like April's supposed to be one of the strongest. It's supposed to be the strongest month of the year. And you're like, dude, what's going on? But we got hit with all this like geopolitical stuff, drones getting sent over in the Middle East. There's a lot to cover today, but the biggest standout for me still today was Apple, right? And Apple's been in this huge downtrend all year. It's probably one of the worst looking ones. Good morning, man. Yeah, we will take a look at Meta. Apple's been in a downtrend all year long. One of the Mag 7 who is just negative. And really lost its shine. Even this morning, got some poor headlines about not losing its top spot in terms of the number one cell phone manufacturer, but seemingly still holding strong. So that's interesting, right? And I think it's time. So let's get into it, right? We'll go through a little bit of that. Overall, some headlines I did want to cover is weird, right? CNBC out with this headline. We saw a lot of selling last week, right? A ton of selling. Look, there's Sharky. What's up, man? He's in the house. What's up? Just starting to hit some headlines. We saw a lot of selling last week. There's a headline out from CNBC. Hedge funds actually selling stocks at the fastest pace in 3 months, and we definitely saw that in the charts, right? I put some of these notes in here in terms of where they're coming from. BB is Bloomberg, by the way. Bloomberg. I live in California, and we're looking for a place, and it's like, okay, California lender foreclosure filings are ramping up per Bloomberg. So Not surprising here. Our real estate is still at the highs. It's a little wild, man. Fox Business, federal debt, and this is where it gets funky, right? Interest rates have been in the news all year, really. But the federal debt interest costs, like their cost to service the debt, their interest payments, have officially, get this, Sharky, have officially eclipsed the defense spending. Is that not wild or what?
That's
So
healthy.
it's healthy. We will see. I will say we always get into this predicament where the interest rates that the government has to pay in order to service the debts, meaning like the bonds that they're issuing, get to like this astronomical level, and it happens every few years. So it's not out of the norm. It's not completely out of the norm, but it's also why you'll hear in the Fed speak, and a lot of the sentiment is like if you haven't noticed, they kind of want to lower rates, right? And they kind of want to lower rates because, like, look, our interest, like, if you're thinking about like you're racking up a credit card debt, and your rates are going up to hold your balances, and you're doing nothing but continually spending on your credit card, and that balance is going up and up every month. You're like, oh shit, I need to get this rate
It's
down.
like they don't want to do it. They know it's the right thing to do, but they don't want to
Yeah.
do it, or at least keep it
Yeah.
there too long. And they're like, oh man,
Yeah, no, that's exactly right. Right. So it's like, inflation's still high. So like, do you really like it's coming down ish, but like it's still sticky? Do you want to really lower rates? There's nothing. Let's say this, the data isn't screaming lower rates. That's what's true. So if they're going to be data dependent, it's really hard to say, why would you lower rates, right? Like if they're exceedingly data dependent, the data's not screaming to lower rates right now. I'm just going to put that out there right now.
Yeah, no, I
You know,
agree.
but you can hear in their tone across the board, it's like they kind of want to lower rates. And the market, this whole rally has been predicated on the idea that that they are going to lower rates.
Right,
So
right.
we're going to dive into that a little bit today. I think Sharky and I had
But
some.
I think I don't know if we're going to go over it, but are we going to look at the Fed tracker?
Yeah, we can for sure. CBOE Fed tracker.
Well, we'll do it later. We'll get to it. But I don't
Yeah,
know.
we'll get to it. I had Sharky and I had a little bit of back and forth, and he had a comment. He's like, "I don't want the Fed to lower rates." He would
Yeah.
hate it, and I'm like, "Wait a second.
Well,
Well,
I just don't. I don't think it's. Yeah. Well, like you said, if we're going on the data, it's not right. And
yeah,
there are just. I think there's a lot of cases for them just having that stagflation problem right now. So.
yeah. Stagflation is a big deal, right? We can talk about that too a little bit if we have time. But another headline out of Bloomberg. The New York Fed Williams. Just an article out, no need to adjust rates in the very near term. So this is where we are, right? Like right now, we've essentially priced out. I mean, if you rewind the tape a few months, we were talking about 6-7 rate cuts, right? And we're all like, okay, if you believe 6 or 7 rate cuts are going to come, then you really believe something bad is going to happen, right? Like for that to happen, something really bad would have needed to happen in the market. So thankfully, we're not there anymore. But what I will say is, like where we've come so far, and to Sharky's point, we will take a look at where the tracker is. We've priced out all but 2, maybe. And depending on who you talk to, right? Like you've priced out all but 1. Some of them, some analysts would say you priced out none. Like there's going to be none, right? So we're pretty much at the low end of like where the expectations are in terms of rate cuts. And to me, I think that's actually pretty good, right? It's a good spot, right? And April, historically seasonally strong, obviously not that strong this year. It's an election year, so who knows, right? What's to say? Maybe April showers bring May flowers. we'll, we'll we'll see, right? But anyways, another couple notes. The ECB basically holds rates, but they point to a cut in June, and then the final one, right? So I think this was the one that really kind of hit the market, right? So we had this whipsaw Wednesday, Thursday, Friday. So Wednesday up. Was it Wednesday up? Let me look at the charts real quick. So Wednesday down on CPI, right? Thursday up on PPI, Friday down on Israel attack. And it was just like an epic whipsaw in the market. Now Monday up, intraday Monday down, right back to where we've been. Get this, the entire week last week. So SPY has actually gone nowhere for weeks, really. So technically we're not breaking down, but it's been a rocky ride. I'll give you that much. That's what's true. So I did want to get to this really quick, and I think this is important for a lot of different reasons. But because this is in the headlines right now, I do think this geopolitical situation is a real risk, right? Like, I've never been a super active participant in a full-blown war. I'm not old enough to have been. But what I will say is, what I do know is I have this little conflict cabinet, right? I call it the conflict cabinet, conflict cupboard, whatever. But where do you go when conflict is on the rise, and what's a good place? Where do market participants tend to go? And you really just, as a market participant, you want to follow the money, but ideally you want to know where the money is going to go before it goes. And in today's market, money moves faster than it ever has. So what I can tell you is that gold is always number one. And here's the problem with knowing this kind of scenario is that we've been long, Sharky and I have been long gold for a very long time, for at least a few weeks, maybe a month, right? And haven't had an active swing trade on gold. But as you were watching gold and you listened to some of us on Spaces, we were able to see very quickly and more recently that there was all of a sudden this war premium that was being built into gold and the gold contracts themselves. And when an attack finally hit, it kind of became more of a sell than use event. And we really saw that kind of blow off on Friday. And so what I'd say now is I would not chase gold, right? I would say that gold has had such a move that war premium really needs to burn off. And I think it goes nowhere. I don't think it's a short, but I do think it's time, if you've been long gold, I think it's time to take some profits and maybe reallocate. That's my 2 cents. The other standout here is oil and commodities. It's the same story there. Oil and commodities, very similar. Like, has there been a war premium built into the price of oil? I think there's an argument for that, right? And so it tends to be a bit of a sell than use event. And that's where I'm getting to. The money moves very fast in today's market. And what happens to this kind of stuff, whereas like the defense is typically where you used to see a lot of money go. And I think you might see some of these bounces in some of those defense contractors, maybe like a Lockheed, Raytheon, et cetera. But by the time something actually happens, you guys, you're late to the party, right? So if you're looking,
interesting, they haven't really reacted this time.
And to that end, it's gotten so fast that like the defense contractors, I don't even look at them, because they have, like, over the last few years, they haven't held any kind of movement whatsoever.
Yeah.
And I just don't feel like they've been participating in this quote unquote conflict cabinet, but they always come up. So I always feel the need to talk about them. But what I will say is that there's a couple pieces here that haven't actually shown up, but are starting to really peak, and not a lot of people start talking about them. But what we'll say on the short side, right? So travel, I think we started to see that, right? Boeing's got its own situations, but the airline's starting to peak out, right? Spending starting to peak out, right? Think about, if there's a major conflict, what are you not doing? You're not traveling you're definitely not traveling internationally, right? And you're not like spending all kinds of extra money, right? You're probably spending on consumer staples, like maybe
actually, to that point, I saw that RCL canceled a bunch of cruises at the end of this year because of this. So
yeah, that's a real,
that's a great point and an interesting idea. And yeah, I just saw some news already about that.
It's a very real thing, right? But people don't really talk about it. You don't necessarily think about that. But when you look at what's tradable in these scenarios, that should be one that's like right up top on your list of things to do. The other one that's not, historically, the flight to quality is what they call it, right? Flight to quality, flight to safety. And in both these, and I haven't mentioned this, but bonds. And this is where it gets really interesting to me and Target, and this is where we got our conversation. But if there's a real flight to quality, historically, bonds get a bid. And when I say get a bid, people rush to buy bonds, right? And I can look at the bond right now and be like, okay, the yield's pretty high. We've do believe that we're pretty maxed out on the yield itself, and the market right now is pushing this yield higher. I think maybe a little too. Anyways, so the risk to reward right now for me, and I'm just going to speak to me, on something like a TLT is actually very high, like a high reward, I think, and a low risk ratio as it stands right now. It's not going. TLT itself is not going up. I think it just continued to go down, but how much lower does it go? So TLT itself is inverse to the yield. Honestly, if there's some kind of escalation and that old mentality of flight to quality does step in, I think that the bonds do catch a bid, and that's like TLT to the long side. Right now, I would be more of a seller.
We'll have to get into the chart because it is coming into a really interesting spot technically as well. So
yeah,
there is some confluence, and it always works out like that. A lot of times, we always get news miraculously when when some technical setup also is aligning. So it'll be interesting to dig into that chart because I'm with you. From the technical standpoint, I definitely I'm with you.
And what's funny too is that if that does actually play out, if money does start hiding in bonds, what that does to the yield is it lowers the yield on its own. And what could happen is that if there's enough money flow, well, you never know, but if there's enough money flow into bonds themselves, the yields could come down, to a decent level, and that could actually put a bid under the market itself and hold us at the support level. So, I mean, it's an interesting theory overall. I'm definitely watching all of that. What I would say right now, the best setup, I think that's the best risk reward in general, but like the best setup, again, back to that flight to safety is healthcare, right? And so I just want to put this out there, right? I think, look across the board, where's safe haven stocks? What are safe haven stocks? Look at what's happening right now in the market today. Who's up? Who's down? Who's been down? And the setup that I'm talking about, into earnings this week, and we'll cover this. J&J has earnings this week. UNH has earnings this week. Abbott Labs has earnings this week. Who's up? J&J, UNH. Interesting, right? They're safe haven type high free cash flow companies, right? Apple for me would actually go into that bucket, right? It's not somebody that you're going to really want to short, right? Neither is like a Microsoft, but you look at like a high debt company, maybe like a Shopify. Poor old Bucky, the Winter Soldier, just got shellacked today. So if you were excited about a 160 on Bucky, you're probably not happy today, and it sucks. But it is what it is, right? High yield. If you don't know, there's a ticker called HYG. That's high yield bond, like high yield like debt in general. That thing's dumping, right? Like so. Anyways, like anything that's yielding high, like anything that's has a high yield or high debt companies, that's typically a short in a flight to safety or a flight to quality. But I just want to give this to you guys in terms of like, what's your playbook when these things happen? This is what it looks like. And then you can kind of extrapolate out from that. So did you want to look at something, Sharky, before we move on to like the rest of what happened last week from a data perspective? We were just talking about TLT. Here.
Sorry, I had to get out of a long position.
Sharky's still trading. So TLT,
I was in a little bit of a long there. I had to get out.
Yeah, that's all good. So
Okay,
TLT is an interesting position.
As far as the news, we could wait for TLT until the chart. So it's up to you. I mean,
you could wait to it, right? This is where we are. This is from this low to that high. That's basically right there. We're in what we call like the golden pocket, right? So between a 0.65 and a 0.618 retracement, that's exactly where we're sitting right now. So that's why it does make this like a really interesting spot right into where it previously broke down, and right where it started to
go into a weekly here. Go into a weekly view.
Yeah, so you can also pull it back, same spot, right? All of this here.
We're retesting. Oh, okay.
Is going to line up.
Well, no, I was actually talking about the trend line break. If you go, if you scroll in.
Oh, I'm a horizontal dude. You want a trend line? Sure.
Well, okay. Well, you can go from the other one. Yeah.
Oh, not that far trend line.
Yeah, exactly. Yeah.
There. Yeah. Oh, that's so more confluence, right? So typically when you guys have, I don't know if you know, but if you follow me enough, you know that I don't really take these trend line breaks as longs. Most of the time you'll see me shorting these type of breaks, but I do wait for the retest of these trend lines to go long. And those end up being better longs anyway. So yeah, I think.
You see what we got here, paper?
Yeah. Oh,
In the
yeah,
camera.
you got our look at that. Nice. Do you like that one?
Some promo.
Yeah, that's our vape company for sure. So yeah, Primo brands. We also have a brand called Lucid Vapes. If you don't know where that came from, well, you could guess where where that brand name came from. But anyways, so that's TLT right now where we stand. TLT, by the way, is a 20-year plus bond. Again, and this is gold too, right? Like I think we go absolutely nowhere. GVZ, we've talked about many times, is that gold volatility index. I think when it tagged that 24, it was like, oh crap, we got to sell, right? For me, the exit stage left on gold was when the premiums are outpacing the price action at an unsustainable level, and that's exactly what we saw happen on Friday. There was no question in my mind that has to come down. That has to come down in a big way. And if you're going to hold anything, it cannot be an outright call option, right? There's no way that was going to hold its value. It was just way too expensive to hold its value. It's very similar to like if you're in puts and on, let's say, SPX and SPY drops like a rock, and you see, let's say you saw VIX at 23, you need to take that. You need to take that right then, because guess what? Those premiums are not going to sustain that type of that type of level, right? And so that's what we saw. Man, we are. This is not looking good, Sharky. What did you do to this market? Oh, IWM. She's breaking my heart, man. I'll tell you what. Breaking my heart. All right, so let's get back to this really quick before I start crying. But anyways, so rest of the recap, right? I'm gonna go back. We'll look at SPY, right? But so last week's story, if you will, started on Wednesday, right? And Wednesday, the story was core CPI, or CPI really, or the actual inflation rate, right? And I think that that's really the market's favorite indicator. If that makes sense. It's not the Fed's favorite gauge of inflation. It's not my favorite gauge, but it sure as hell is the market's favorite gauge of inflation. And I'll tell you what, within 30 minutes of that number coming out, the market moved basically the length of an average week within 30 minutes. And that was such an insane day. Let me see if I have my, usually I have it set up on a 30-minute chart. Oh no. Anyways, this was Thursday right here. And that's like, boom. Am I looking at? No, sorry. This is Thursday coming out in the pre-market. And this whole move right here in the pre-market, guys, that's the length of an average week right there. I think out of the gate, I was like, I'm not touching this, right? Whenever you see a move that strong, remember, how many times we say this, Sharky? Markets are either running or they're resting. When they make a big run like that, expect a big rest. Same thing like gold. They've made a huge run. Expect a huge rest. So it doesn't mean that they're a short, because obviously SPY bounced, but it's a big rest kind of scenario. We call this a kill candle, not because it kills the chart as a whole, but it kills the momentum overall, right? This blue line, by the way, this is that annual trend line I was talking about. So this is actually since January. You could bring this all the way back to November lows, way down here, or October lows rather. But this is the annual trend line. This is really the first time that SPY's kind of breached it last week. And that CPI number right here, that's where we opened up and boom, just kind of took off, right? And these horizontal lines, you guys know, this is my NFP level. So it was basically, we're in a chop zone right now. Today we're breaching below our NFP level, but it's not an open below. So it's still kind of TBD. And this blue line on the bottom, this is a 50-day simple moving average. And I do want to point out that Friday's close was the first time that we actually tested this simple moving average. Look how far I have to go back, all the way to November. And this is the October lows. SPY hasn't seen that 50-day since November of last year. Like, that's a really long time to be trading against it. So, seeing a pop today in the pre was totally expected. I think the question is really like, do we hold it? But if we don't, if we don't, I'm not going to get over my skis. You're going to have to see a clean open below, 509. If you see a clean open below 509, it's going to get ugly. It's going to get ugly really quick. I'll just say that. We're not there, right? You're probably going to see 505, but then there's this huge, basically fair value gap that's below 505 to 496. There's a 10-point gap that would be filled. I would very much expect something like this, and I'll just draw it out. So if you see open below here, I'd expect this to hit, bounce, come back up to that 50-day. Everybody get bullish again, and then you might get back to that 510, lock in a lower high, and just brace for impact, because that could happen. So you don't need to short it here. Like, you'll see, right? Like, it's a dangerous spot. I'm a little scared to go long. It's too deep to go short, if that makes sense. Just kind of at a precarious position. So for me, it's kind of a no trade zone on the indices. But back to that conflict cabinet, there are, like Sharky, you mentioned, there's a lot of stuff out there that is very eligible from a trade perspective. I didn't notice the RCL thing, but I do have a short on that I can share here in a little bit. But let's finish this really quick. So that was Wednesday, and then what happened Thursday, right? So Wednesday is producer price index or consumer price index, and then Thursday we get this bounce, and you're like, why did we bounce like that? So it's another economic data point. So producer price index, that's what the producers inflation rate is. So if you think about it, are the producers like, what do you call it, carrying their additional inflated costs down to the consumers, right? Are they increasing?
Well, I got a good analogy for it, right? The PPI is like when you go to the restaurant, it's like what the restaurant pays for the hamburger and the bun.
Exactly.
And CPI is what we pay when we sit down to buy it.
Yeah, exactly. And so the question becomes, is the restaurant increasing prices on the hamburgers? And that's what we don't know, right? Because you can look at something like someone was talking about cocoa prices the other day, right? Cocoa is like at like epic highs, right? And they're like, I want to go long Hershey. I'm like, wait, why? Why is Hershey raising the prices, or are they just eating the extra costs? What's the stock chart's telling me they're just eating the extra costs, right? Mm-hmm. So like, you got to be really careful about that stuff. So what happened was that when PPI came out, actually, is that it was actually lower than what was expected. So that was a huge boost to the market, right? So consensus 0.3, actual came in at 0.2 for the month-over-month headline. And I think the year-over-year, this is what they call super core, by the way, taking out food, energy, and trade. Go figure. 2.8 versus the 3% consensus, and the core slightly higher, 2.4 against 2.3. So there was a little bit there for the bears, or for the bulls, meaning like, okay, well, maybe the producers aren't getting hit as bad as we thought. It wasn't exactly the double whammy that it could have been from an inflation perspective. So had PPI come in hotter than expected, oh yeah, we would have been in a lot of trouble. But because it didn't, we weren't. Unfortunately, we got the actual strike on Friday, and that was like kaboom. And I think it was Thursday. Was it Thursday or a couple of days ago? We got the headline. Oh, it was this day. It was Thursday of last week. We got the headline that there was an imminent attack coming, and so the market had been on nerves like that entire time, right? And so that's the landscape that we're in, right? Like there's a lot of nervous traders out there. It's getting a little shaky, but it's tough to say. What I'll say is, like, in terms of geopolitical stuff, eventually it's going to shake out, right? Eventually it'll be a dip buy, but I would kind of like chill for a minute. I'm not saying it's time to go like sell anything. Like I gave you some levels where you might want to think about hedging at least, and we're talking very short term. But again, just keep an eye. I think there's a couple spots. Look, if you've been long some things, it's a good spot to take some profits in some areas like gold, like silver, like oil. We're seeing that, and reallocate. In my mind, reallocate to some areas that have already been beaten down, that have some decent catalysts on deck that I think might be really good, right? And I want to stick with that kind of like flight to quality, right? I want to stick with high quality, high free cash flow companies. I still like Apple, right? I'm not going to open it today, right here, right now. I will say there's a lot of heavy bullish flow on Apple. I might open it later. We'll see. It's the flow on this is a couple moonshots, maybe for like way out there June. I saw a lot of flow on the 200 strikes. And then there's some what we call debit spreads for next week's strikes as well. So I like that from a slow grind to the upside. I've been adding to this position from an equity perspective for a while. I'm happy with that. But I do think that, that this one finally catches its leg. What I'll say is unless it's really opening and trending over 177.50, that's the 50-day simple moving average, it's going to have a hard time, right? So this is what we say, like essentially like you play like this moving average ping pong, if you will. I'm going to take a quick fib, low to high. A 50% retrace is going to put us at 172. Go ahead.
Time for a good fib.
Yeah, good fib. And this is kind of like your golden pocket right in here, which actually lands us right on that 20-day. So if you see it around 172, I think that's a great spot. And that would lock in a higher low. And I think that that's when the bulls would really step in. You're probably going to have a little bit of a struggle at the 50-day for now. I don't know that it comes this low. I have no idea. And honestly, by the time that happens, this could be a little bit higher. That's this white line. But if it is over 177.50, she's good to go. She should see 185-ish in pretty short order.
Yeah, sorry.
You alive over there, Sharky?
He's coughing.
Oh, it's all good. Sorry. So I've skipped forward, but I want to talk about that. I think that's probably, honestly, I think that's a layup trade right now. Whether or not it's this week, I don't know. Right? I just don't know. I think that's the layup, though. For the rest of the calendar, there's really not a whole lot on deck. We did get retail sales, and I will say that, while retail has been weak coming into that print, the actual print was a good bullish print, but a lot of times that ends up being a sell the news also in terms of the headline number. I do have a couple short positions on retail overall. So I'll go ahead and look at those really quick. And then tomorrow we have a JPL speech randomly. And I don't know where he's speaking or what. We have a handful.
I was
of
looking into that over the weekend. I couldn't find where he's speaking.
Yeah, so it wasn't on the normal. Or you mean where? I don't know where either specifically. But it wasn't on my normal calendar. I'll tell you that. It had to go to the FX Street calendar. It's on this one. So the Fed speeches, and that's tomorrow. This is 10:15 Pacific. So what is that?
10:15 Pacific.
Yeah, moderated discussion with Bank of Canada's governor at the Washington Forum on the Canadian economy. Yeah, so there it is, right? So I don't think I'll zoom in a little bit. Yeah, moderated discussion with the Bank of Canada's governor at the Washington Forum on the Canadian economy. That's probably not going to be a thing.
Yeah.
I mean, it's always a thing when JPL takes
right. Yeah, I know, but I don't think the market really is.
Yeah, I'm with you. I don't think so either.
Oh, is it time soon for? Oh, we're not there yet. Okay.
Almost. Let me 2 more slides. So real quick. So other than that, guys, what I'll say is there's really nothing on deck in terms of economic data. So that does put us in the clear. As long as everything kind of subsides.
Well, we got Netflix.
Yeah, as long as everything subsides, we're in the clear just to actually focus on earnings. And I grabbed this earnings calendar from Savvy Trader, by the way. I did start using it. Take a look at it. It's actually got some pretty cool data. I think you can use that little QR code right here on the top to get over there. But anyways, Schwab, I didn't see Schwab this morning. SCHW.
No, but Goldman did well, which was good.
Yeah,
Which was
Schwab and
interesting
Goldman. Look at that, Schwab.
to
Boom,
how
72. Wow, that's beautiful, right? I mean, both of those like kind of killed it. I think a lot of
JP
these
Morgan
things.
didn't do well.
What's that?
But JP Morgan didn't do well. Which was
No,
interesting.
JP Morgan did not do well, right?
So
I
it'll
think
be
this is
interesting to
about
see how Bank of
expectations.
America performs on Tuesday.
Yeah, the JP Morgan, all that stuff. By the way, it's all about like forecast and expectations, right? So just like an economic calendar, it's about what the consensus is. It's not about what it was compared to prior. It's about what the market's pricing in today. When you see us looking at things on the calendar, economic calendar, that's what's priced in right here, right now, right? Consensus, that's what that is, right? When estimates are there, if it's against, and it's all about guidance, because remember, the market is a forward-looking vehicle. It's always thinking about what's going to happen 2-3 years down the road, right? That's why, when news hits, it ends up being sell the news, because what is there to look forward to, right? It's a huge thing. UNH tomorrow before the open, J&J tomorrow before the open. I mean, I think those are set up for better than feared. Abbott also. These healthcare names have been just completely demolished, man. So those setups, a lot of bad news is priced in, a lot of them, right? I think, Bank of America, I don't know, but Morgan Stanley, it's a gone nowhere stock for, I don't know, 10 years, literally gone nowhere. So that's maybe sets up for a surprise, right? Maybe, who knows, right? IBKR probably long, right? There, but then we get into like a TSMC and we get into a Netflix. So TSMC tomorrow, Thursday before the open. I mean, this is where we get. There's a lot of expectations there on future prospectus, right? Like guidance. It's all about the guidance, right? They're not going to have a ton of revenue today for what we've been talking about that's going to come years down the road. So when you start reading into that deep, it's kind of like, nah, you become more of a story stock, right? What I will say is there's one I just skipped over. That's SL Green down here after the close on Wednesday. So I have a position in another REIT, if you will. SL Green's one of the best of breed real estate companies. There's just been so much talk about, like I just covered, California real estate foreclosures. If these guys dump it, I think that we could have some trouble in that REIT space. So I do want to be really cautious. God, SPY is just tanking right now. Sorry, I don't know if we missed
It's
something.
just a bloodbath. Look at this.
It's brutal out there, man.
Oh my god,
It's brutal. So I mean, maybe this sets up for a bounce into the end of the week. We'll see. Let's get through this. So we want to. I think I hear Miss Cleo calling us really soon. But again, it's Netflix too, right? Think about this, guys. Netflix. How many upgrades has Netflix gotten over the last week or so coming into this print? Expectations are high, right? So maybe they beat. Netflix has had a good history of that. I'm not saying that they don't, right? But when you're thinking about taking your lotto trades, just be really careful about. It's all about the setup. It's all about expectations.
Netflix can rip too. So
Netflix can rip. It's a bit.
painful.
I'm not even thinking about trading Netflix because it rips so much in either direction. Total gamble, right?
Yeah, and the
I'm not about
premiums
to
are super expensive. You can't lotto.
I'm not gonna FAFO
Wisconsin.
10K on Netflix, man. I'm cool. I'm cool. You guys have fun, man. But hey, I hear our friend. Hold on. Is all right, Sharky. Have you read this yet?
No, I was asking you last night to
I
do
just
some
got
show
this.
prep.
I just got it. Okay. So there seems to be a man on a horse here. Oop. This is a man on a horse.
Yeah,
with a
the Knight
stick.
of Wands there. Look at that.
Yeah. So we're gonna ride around with armor and beat people with a stick. Oh God, what's happening? And then this is a wand, Knight of Wands,
All
and
right,
then there's 7 sticks, and then we get a cup.
So
on
yeah,
Tuesday.
we're starting it off with fire. Well, I guess. Well, that's
is that fire?
That's the
Oh, we are on fire
that's the
riding
theme
horses.
card, right? That's the theme card, right?
Yeah. So we're on fire riding horses, holding our kindling. God, that seems dangerous. And then we're gathering more wood. That's Monday. That's today. And then we're looking for water. Tuesday, Knight of Cups. And then it's Judgment Day. Wait, did we die? What's happening? Judgment Day on, oh God, Wednesday.
Oh, the Hierophant.
What is that?
The Hierophant. That's like a priest.
Oh God.
Yeah.
I don't know if I like this whole set. And then I remember this one.
All right. Oh God, this. Oh boy.
This is like the Seven of Swords. This is when we send the mages to go.
We don't want to see that. That's never good. It's usually.
Oh God. All right. Well, we're done speculating. All right, let's read what she says. Here's the actual cards, right? So theme card is the Knight of Wands. Knights are big energy, and the suit of Wands is fiery and impulsive.
Yeah, we're talking about the fire.
Yeah, okay. They usually start strong in the pre and fade a bit near the end. God. She called it for today at least.
So maybe this is going to be a lot of overnight bounces and then fades.
By the way, you guys, she called last week so freaking perfectly. I've never seen anything like it. So I'm listening. My ears are open this week. She called that a random headline was going to come out Friday, and she called that it was going to be a crazy whipsaw Wednesday into Thursday, flip flop, and then Friday was going to have some random headline hit and just take it all back and then some. And she would, God damn it. Anyways, this card infers expansion, new money, and new horizons. It can be a boon. I don't know what boon is, but we'll be fighting historical negativity. Look for energy to start strong and fade out midweek. This is it OPEX week?
At the 17th, it might be.
Okay. 17th, so Monday is the 8 of Wands. This card signals rapid action and big moves. Okay. It's also a wand card riding on a wand's theme.
The 19th.
Which means we could see an extra surge of energy and a hint of what's to come for the rest of the week. God, we're still going, Sharky.
I know, we're still drying here. I was looking
can't step into that
too, and I was like, but I didn't get it.
It is slightly negative historically, but I treat it as a trend card, knowing that there will be some big wild swings designed to shake your faith. Well, yeah. I'd shake my faith for sure right there. So okay, check.
Someone said, "Did she work for the CIA?"
Tuesday, Knight of Cups. We've drawn a knight. We've drawn a knight on a knight theme. This should be interesting. Unlike other nights, this one starts slow. Yeah, so big run, expect slow start tomorrow, and tends to build steam as the day progresses. It has been bullish more often than not, so that could be a positive sign. So maybe a retracement. The cups represent emotions, which suggests that we could be feeling euphoric and or panic in the event of a red day. She doesn't know. She doesn't know, right? I wouldn't expect a big move here, but we should get some momentum to trade. The big message is not to give up into your emotions. Okay. Not to give my emotions would be to short.
Well, that's because the cups is water. The cups is water. And
so we put out the fire.
Right. Yeah. So
I like that. Okay. Wednesday's judgment, man. Something is building here as we're moving from 8 to Knight to major arcana. Okay. This could indicate a trend in the same direction as today. Oh God. But that may be a bridge too far. This card tends to use its energy. So maybe JPAL kind of gives us a little mean version. This card tends to use its energy to keep things in place and restore balance. Therefore, I'm expecting we're buying dips and selling rallies. Did she say that right?
I guess maybe that means choppy price action.
Yeah, that means we go nowhere. So take Wednesday off. Okay. I also think that if we've been, that's just her opinion. I don't know. I also think that if we've been near the top of this range, it's weak. Today builds a topping pattern. If we're at the bottom, it's accumulation. I believe it's likely a pivot. Okay. Okay. Here we go. The Hierophant. Back-to-back major arcana should keep things moving as we roll into Thursday. This card brings structure and tradition, which usually infers chop. God. All right. We often close exactly where we opened. Really? The good news is that so today was the day to trade and I didn't trade, whatever. The good news is that this is positive historically, so we could just slowly grind higher. If so, that means Wednesday isn't so much a chopping pattern as it is consolidation. Let's not get ahead of ourselves though. Plan on a chop and difficult day trade. I'm okay. Take Thursday off, she says. The trend should be one direction, but it may be slow. This is not encouraging, Sharky.
I don't know.
It's not.
Sounds
It's
like
just
a
not.
wacky week.
It's not encouraging. So
Maybe because we might get a lot of weird tape bombs throughout the, just in taking us in either direction. They're attacking.
this is
They're not
pretty
attacking.
aggressive.
They are.
This is ultra aggressive as I'm looking at it. It's right into the 50-day right now. I couldn't be long here. I couldn't be short here. And I couldn't be long either. So, oh well. Jesus Christ. Oh God. Look at that.
It's gold and silver starting to get a little bit.
Yeah. Friday, 7 of Swords. Trickery is afoot. Trickery is afoot on Friday. And a trap has been set. Oh shit. Trap has been set. Ah, where's my Wicked Witch sound effect? That's what I need.
You have a Wicked Witch?
I think I do. Oh, that's what I have though. I have a yes. I have a Hi-Ho Silver. Wicked Witch, yeah. Wicked Witch. All right. Trickery is afoot, and a trap has been set. Look for a quick move on the open or overnight that gets reversed suddenly. That's like today, right? And holds firm for the rest of the session. Okay, so it's a gap and go nowhere.
A gap and crap.
A gap and go nowhere day. All right. All right. It's okay. If we're near the top of the range, it's probably a bull trap. Otherwise, it's a quick flush that becomes a bear trap. In either case, bail out Thursday and wait for things to settle before joining the mean reversion trade, which sounds like next week.
Wow. Okay. Wow. It sounds like we're coming into
so net
waters.
Yeah. Recap. We should have one directional movement for most of the week.
Okay. Maybe
today, right? With a possible pivot on Wednesday. Thursday keeps us stuck in place for a mean reversion Friday. Okay. So what I say is
we just turned down for most of the week.
Yeah, most red days or red weeks. So if you guys remember trading in the bearish of the bear markets, most red weeks close out very strong green Fridays, right? And most green weeks end up like kind of bloody Fridays because you'll see a lot of profit taking towards the end of the week. So that makes sense, right? I think what she's saying really, like, this is where we are, that 50-day right now. This kind of sets up to almost exactly what we were just talking about, though, Sharky. Like, get to this level. So we have this gap here, right in here. Did I not just lay this out? We're going to open, stutter step, boom, right? And then a Friday stop.
It could be cool.
Which means like
path we could take
next week. That would be cool. But all right, it means that this is not the dip to buy, boys and girls. Well, at least that's what Miss Cleo says. Take it for what it is. All right, Sharky, I appreciate you, man. I'm gonna take a look at some of these chart requests here. I did go over Apple and what I'm looking at. I do have some existing positions.
You're the Apple ball.
Yeah, I love my Apple position. I'm a heavy profit, but I'm not quite ready to add
that great 4% move. It was a great.
Yeah. Here's what I say. I just opened this position right now, and it instantly started going against me. I'm assuming I'm probably gonna turn green on it soon. I'm not. When I sent this, I sent it. I'm like, I'm not babysitting this at all. So I was long Nike the other day, like off the lows here. I didn't close it at 92. I had 92 calls. for this week. But what I'd say is we're right into a very difficult, like a difficult spot. And when we were just talking about this conflict cabinet, this safety trade, like flight to safety, and where do I not want to be, right? So China right now is weak today. In general, weak, blah, blah, blah. And so Nike run into its 20-day simple moving average right here, right now. And this other kind of like volume shelf, all of this right here, I just took short. Very short term, small shot. I took some 93 puts. Maybe 94s would have been better. That's fine. It's close to the money, if not in the money. I'm just looking for a little bit of a retracement, really kind of like 91s, just so that right here back to this level and then stop. I think that's a clean swanger to me. In this nasty sell-off, for whatever reason, Nike's just holding there. I know it's been, it's super low, but again, right into a difficult level. I hammer it. Sorry. Hammer short. So let's see. Kevin's asking for Hood. We will take a look at Hood. So Hood, I have a position on right now, and I'm very close to closing this. I might as well close it today. So weekly chart, I needed to have a weekly close over this level. Like we needed to have this weekly open and close over, I think it was like 18 right here, 1787. And this current week's candle coming below last week at 1759 is no good. It's not fun. We're a little extended. We're coming into earnings. I do think that there's catalyst for this, but the environment that we're in is not conducive for companies that are not like flush with cash, right? And Robinhood, let's be real, is not a flush with free cash flow type of company. I like it. I love the stock. I'm long the stock. I'm not touching the stock. But from an options perspective, I got to close this today. And so we're breaking down literally like right now, unless we can close over 1785. It's gotta come down, because you're not holding this trend essentially. Like you have a daily breakdown, which would probably take it about 1650. Not a ton, like from a stock perspective. I don't care. And that's right into this prior consolidation here. So that's Robinhood right now. Do I want to be short Robinhood? No way, right? Because this is one where it's probably gonna catch a I believe it's gonna catch a headline that's gonna be like some random upgrade, and it's gonna and you won't know it. But you can't trade for that. That's luck. We don't trade based on luck or hopium. That's no good. Sharky lost his camera. All right. So then let's see. He's back. Marco's asking for Meta. Yeah, so Meta is a stock that's like flush with cash flow, but also kind of one where this is where I'm at, right? I think that the near-term winners are probably going to get some profit taking. Look, today's tax day, guys. And I'll tell you this much, Sharky, you've been in the market like when you're trading and you're like, these are great companies. And then you're like, my favorite stocks, like people are using my freaking favorite stocks like their own personal damn ATMs. And I'm like, what is going on? And you just try to keep hammering it long, and you average down. You're like, why is this going? There's no reason for this to go down. Look, it's that kind of setup when you have a winner like this into tax day. No, it's a good company, right? It's a good company. It's a decent chart, but the chart's not telling me that it's time to go long, right? So right now I kind of have like a downsize momentum indication coming into earnings. So when you come into earnings at the end of this month, you get a little bit of like shakiness, profit taking. I don't think this is like heavy short by any means. Today, you're losing the 20-day simple moving average, right? That's that gray line. You're testing it, right? Can it bounce? Yeah, it can bounce a little bit, but I don't think that you're running into Meta ahead of this print being up 400% or whatever from the lows. I just don't see it. That's from an investment perspective. So could I be wrong? Yeah, sure, I could be wrong. Is it a great company? Absolutely. Right? Am I shorting this? No. And so what I think would typically happen is you get stuck inside these kind of like SMAs or simple moving average, and we play this what we call a simple moving average ping pong. Bing, 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 bing. And so I don't think she moves a whole lot, to be quite fair. It is consolidating, but this is like that first breakout. If you caught it, great. Now you're coming back in to retest this. I think you could undercut this prior downtrend just a little bit, but because of the way that these moving averages are setting up, what you want to do when you see these, and that's, let me just take some of this stuff off. So that's this like, so these lines, right? This white line and this blue line. What you're looking for on those scenarios is you're actually looking for them to consolidate and then expand, right? And so when the distance between them is getting smaller, obviously getting smaller right now, right? Smaller, smaller, smaller. That's when price action is also consolidating. Range is getting tighter. Do not expect an expansion in price action while this is happening. You expect an expansion in price action when they're expanding. So like this, very tight, and you see some expansion, what's happening to price action? As the distance between those simple moving averages expands, what happens? Price action expands, right? And that's when you get your kind of bigger moves. Don't expect a big move here on this one until those two start expanding. Can it expand? Yeah, it's going to come, but it's probably going to come post earnings. It could come this way, right? It could come that way. You don't know, but this is kind of TBD on this one for me. That's where I'm at on that guy. Let me see. Netflix has not seen new high compared to other stocks. Looking for 700. Yeah, I mean, look, I think that's all. We're all looking for 700.
Everyone.
Hey, I'm in your camp, man. I'm in it. But this is the same setup, right? Unfortunately for Netflix.
Paper though. I gotta go. We're getting close
all
to
right.
end of
Appreciate
lunch.
you, man. Adios.
With you.
Did you see CRM today? That's what I wanted to look at. Holy camole. So this is what it looks like if those moving averages start to go. So anyways, see you later, Sharky. Love it. Adios. There's this was a headline that came out. They're buying, potentially buying someone. I saw this down in the pre today. I'm like, oh man, I'm not gonna trade this, but if this bounces and rejects up over 292, what is that, 293? Something like this could be set up real nice short. Now that this is clearly, down on the week, down on the month, going to be down on the quarter after basically an announcement to acquire another company for an amount that the market just didn't like. And so this is an example of when these moving averages will actually start to expand. So this maybe pull it back a little bit. This is setting up for kind of a retest and likely short on CRM. Let me see. Market fade. Yeah, market faded pretty bad. What's her Twitter handle? She doesn't have a Twitter handle. Yeah. Transition back away from urge to load puts. Yeah, you know what? I would say I would strongly back away from the urge to load puts. It looks ugly right now, but you guys, every time we've had this kind of flusher, look at this, huge flusher. If you swung puts after a day like this, you got destroyed the following day. Or like a move like this, you got destroyed. Swing. Oh, I'll swing them at the close. Destroyed, right? So no. Like this, I'll swing puts. Destroyed, right? No way. No, thank you. Look at this. Flush, fade. Let me swing some. No, you're toasted every time. So bad idea. Swing calls. Hey, look, if you swung calls from Friday into today, you actually got crushed too. So just saying, this paper, come back to IWM shirts. I don't want to do it. I'll look at Boeing. Yeah, let's take a look at Boeing. Oh God, you guys, never ending shorts on Boeing. This thing. These are tough, man. Boeing is it's at a level, to be fair, right? Like this stuff. Let me take some of these things down. Let me just clean this up here. Take this off, off this old entry, down. Don't need this. So I'm just going to take this. Let's kind of clean this up a little bit. So here's your current megaphone. Is that what I think it is? Oh, they have earnings coming at the end of the month. Earnings coming at the end of the month. I mean, that broad information takes them to this 150 level, which is this consolidation area, lows right in here. I don't know if I would press this, but God, Boeing seemingly cannot get out of its own way. You're right in here. I couldn't press this short either. I just couldn't. I think she chops. What are you? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days red. Oh God. Not that she doesn't do it. Look at this. How many days is this? 35 days straight red. When she trends, look, she trends. 35 days straight red, 50 days straight green. She can do it. If anybody can do it, it's Boeing. Well, I don't know. Bitcoin miners. If you guys are not signed up to our what is it, newsletter, go to my Twitter really quick, papergains.com/links. And then it should take you to sign up for the newsletter right here. Click this. I'll pop this in the chat. Click that. And then we have a issue coming out on Wednesday about the halvening and what to look for. So we'll talk about that. Someone's asking for NVIDIA. So NVIDIA. Oh, wait. Tesla. So Tesla and then NVIDIA really quick. Tesla first. Man, Tesla. She's not looking fun either. I think this is where we are on Tesla. So Tesla, I'm going to take this kind of moving averages off. So Tesla has been bear flag after bear flag after bear flag. We've been kind of like waiting. You want to see this break. You got to break, essentially. God, as unfortunate as it is, she looks, so Tesla has, what was it? Today announced that laying off 10% of the workforce. Oh, yeah. No bid. Yeah, she breaks. I think this is a short right now. And I think you just continue to chop down on this downside wedge. It's unfortunate. God, you guys. I love Tesla. But maybe I'm not loving the stock anymore. I don't know. Let me clean this trend line up a little bit. I think that might be kind of important for us. So let's take that. So that's going to put us probably right around, it's going to put us right around 150. Everyone's looking at 150. The only thing is that it's pre-earnings. Tesla's at 175. Is this right? Oh, I'm looking at Apple. Yeah, this puts us at 150. It's what it does. 146 is a session gap. Let me get a call out. Let me zoom in a little bit. So this is a legitimate 152.10. That's where she's going. I don't see how she doesn't fill this. So legitimate gap. 152.10. That could happen this week. Good call out. Definitely could happen this week. All right, so let's get into NVIDIA. NVIDIA, this 900 levels. So if you didn't know, so 20-day simple moving average, the same thing, kind of like simple moving average ping pong. These are getting tight. I think every time it's kind of rejecting here, you're probably going to get back to that's about 829. I think this continues to consolidate for sure. It's not breaking out. It's not going anywhere really. So if you're inclined to sell options, I think you could do that. I'm just going to take this kind of trend line. It's going to probably pull back, stutter step, might even breach and get to that 50-day. But this one I'd be more inclined to sit and do nothing on. I definitely not until it's comfortably over 910. So 910 is going to be your breakout level here. And it's just every time this thing looks like it's going to dump, it catches an upgrade. So it kind of scares me too from a swing perspective. There's some very clear volume gaps to fill down here. That's like 740, but I would be mindful like until it's below like 830 and really that 50-day. I think she's going to battle in between here for a bit. And that's probably this, like there's going to be a quick blip, 835 to 820, give or take. And then it's going to stop right around 818 right here. Like this, right on that little volume shelf. But it's very small moves. Monday is not really a day I like to trade NVIDIA. She likes to move on Friday anyways. Informatica. Oh no, man, I can't do that. I think that's a micro cap. 10 billion. I don't know this stock. B8 at 125, man. You're hilarious. Can I please do silver? Yes. And AJ, no, I would wait on. I'm not sure if you're long or short NVIDIA, but I would wait in general. Yeah. Overall, we can look at AMD in a little bit. So SLV. Oops. So the thing about silver overall, like silver's decent. It's decent. It's over this volume shelf. I think that silver gold ratio. I think silver still outperforms. So there's a ratio, gold silver ratio. So gold over silver. When it's going down, silver should outperform gold, which it is. Gold flat, silver green, slightly greener. The thing about this is like it's going to be chop zone, right? And so if you're in my groups, you would know, hey, look, this is a big level that we just kind of, I'll back to the weekly here. Actually, I might have it on a different. Do I not have it? So we kind of broke out, but we're right into a pretty heavy level on silver. That's right here. So 27.35 was kind of like my main contention area. I think that she chops, honestly, and I think she chops between that level and what was it? This 25 area for a bit. So I wouldn't be inclined to press a bet heavily on silver right now. Not 25. It's this kind of like top shelf right here. I actually closed my silver today just because from an IV perspective, I might get it a little bit better. But it was this lower shelf here, 25.46, that she had been battling. I think she might undercut it. She might even undercut it significantly. But it's kind of dude. Where did it go? I had a silver volatility chart. Is it gone? Anyways, I could do it a different way. IV is pretty high, ish high. So this is IV on silver, SLV. I kind of want to let it cool down a little bit, see if we can get back into some kind of manageable levels. But all of these, like the premiums on all the options, got pretty high. So I think that the premiums can come down a little bit. Plus, they've had really good runs, so a rest period is more or less in order. You know, you can keep a little bit, I think, but oh, there you go. Salesforce is buying Informatica. There you go. There you go. That was the one. Yes. Boom. Gotcha. So yeah, I think the metals. So I think overall, it's like if you look at the market, a little profit taking in the metals, commodities, miners, oil, and a little reallocation to some of these healthcare names. J&J was looking better in the morning, like UNH ahead of earnings. I think that's what we're gonna see. So that's ideal to me. Can I look at WBA? Really? I mean, I, I don't. I mean, CC. What am I looking at? This one broke down like a while ago. This is like lows of, this is like 20-year lows, 30-year lows really on Walgreens. I feel like at this point it's like this company might be either gearing up to get acquired. Do you guys remember Longs? Longs got acquired by CVS. Or it might go the way of Rite Aid. Is Rite Aid not even a, whoa. Is Rite Aid not even a ticker anymore? What happened to Rite Aid? What's wrong with my thing? All right, something's wrong with something is wrong with my trading view right now. RAD delisted. Okay. Yeah. RAD delisted. So Rite Aid used to be a ticker. Yeah, maybe it goes the way of Rite Aid. She gone. Yeah. I mean, this monthly is gross, CC. It looks really bad. I don't think this gets any worse. This is like, what's worse than this? Lulu? No. Lulu might be Charter? Charter Communications might look worse. I love you guys. New CEO. Okay. So yeah, they needed to do something. But what I would say is, so remember GE, it took 2 years for that to turn around. And then let's look at 3M, new CEO, right? It's going to have that same kind of like stutter step. You could watch it, keep it on watch, right? And find a level, $90 on 3M, new CEO. But at least this one's getting a little bit of a pop. But wait for the price action to tell you that it's holding levels for sure. Oh, mellow. RH. So home builders in general, we're on a tear. RH is in the level where it's super interesting again. It's been a buy, sell, not a buy, hold, I tell you that. I've done this a couple times, buy, and I've held a little too long most times. But yeah, this is every time it's come into this 240 level right in here, it's been a buy in that level, 240. So I would just let this go. XHB is the home builder sector. And so this sector is getting pretty toasted. This is Home Depot, guys. Did you know? Toasted. Remember when Home Depot was just on a ripper? Who Who missed that short? Me. Anyways, yeah, I'd wait for those to kind of base out for sure. But anyways, I think that's all she wrote for now. I mean, UNH is always going to be interesting from a earnings perspective for me. MasterCard. Oh, did I go over MasterCard? I'm short MasterCard. I think this is ideal short. Remember, we just went over this. Spending, like where does spending kind of slow down? MasterCard. American Express has earnings this week. I'm not shorting Amex into the print. I'm staying short MasterCard right here, right now, losing its 50-day. I'm short ANF. This 115 level retested this morning. I actually might lean into this again. And then I covered my dick short, but man, I should have reopened this morning because she's losing that. That's rough. So anyways, all right, guys. Yes. When I know I cried a little bit too. All right, guys. That's it for now. I think we covered a lot. Hopefully you guys got a lot of trades out of this. And I will see you out there. Adios.